Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Hi, I'm your host, Erin Allen with BMO ETFs. Welcome to today's session where we're going to be focusing on both traditional healthcare and genomic innovation and the future disruptors of the healthcare space. So we're going to be discussing the benefits and drivers behind the traditional healthcare sector, but we'll also discuss genomic innovation and how it's really disrupting the healthcare world with groundbreaking innovations. So just as a reminder, today we're not providing you any advice or investment recommendations. Today's show, like all of our shows, is about providing you education around investing and around using ETFs for investors who are really looking to take charge of their own portfolios. With me today is my colleague, Chris Heakes, Portfolio Manager at BMO ETFs. Good to have you back, Chris. It's been a while. And Dan White, Client Portfolio Specialist from ARK Invest. So I'm sure many of you have heard of ARK, but they do manage a series of actively managed ETFs. They're a US-based firm founded by the infamous Cathie Wood, and they're focused all around disruptive innovation. So I'm so happy to have you here with us today. Dan, as our expert on genomic innovation, you're going to give us sort of that behind the scenes look at some of the great research and ideas coming out of ARK in the genomic space. So thanks both Chris and Dan for joining me today. Before we get started, a reminder to check out our YouTube channel to watch any episodes that you might have missed. There's a wealth of content on there. You can actually search by topics that you might be interested in, so I highly encourage you to check it out. Remember to subscribe and ring the bell so that you're notified directly on future shows as they get posted. All right, let's get started with our 1-minute update. So this week I thought, since we're speaking about the healthcare sector, I thought we could look at sector performance as of late and sort of where the momentum is. So you can see here materials, gold and base metals in particular sort of underperforming, energy even beginning that pullback a little bit. You can also see infotech had a good week and discretionary is beginning to pick up. And I think this is sort of a function as investor confidence grows. Markets are becoming a little bit more optimistic following the earnings season, following the latest CPI prints. So just something to consider there around sectors that I thought might be interesting. So let's get into the topic of the day, and we're starting with traditional healthcare. So Chris, can you walk us through sort of a rundown of the overall healthcare sector and what the different subsectors look like?
Yeah, for sure. Thanks, Erin, and great to be here. I think it's really helpful sometimes to not just look at sectors, but like we're doing here, look at what are the subsector components that make up a sector, because it gives you a lot more insight on what actually is in the healthcare sector. I think when we think healthcare, for sure, we think about pharmaceuticals, obviously, and drugs. We think about biotechnology as well, I think, much like the energy sector in Canada, where you obviously have energy explorers, there's a wide variety of service providers, equipment providers, midstream companies. They kind of have their analogs in the healthcare as well. So, we'll be diving under the hood of the BMO healthcare ETFs and some market cap, ETFs as we go through. But, for sure, healthcare is, it's a broad sector, and it's got good diversification underneath the hood. So, obviously, pharmaceuticals is as we know, important part to the overall, healthcare dynamic in terms of, many people are on, multiple drugs and more as we get older. Biotech, and we've got a great expert from ARK on, so look forward to hear what he has to say. But obviously, a lot of innovation happens in biotechnology. Can be a great source of return, but also an increased source of risk, because as we know with biotech, that can be hinge on drug approvals and those kinds of things. So then when you add in kind of the equipment, the healthcare services and suppliers, think of that as being more your inelastic, demand from an economic point of view. We know we're going to need, gloves and masks and needles and, all these types of things. So those kind of exposures can kind of temper out some of that risk you might see in the biotech side and, really create a well diversified portfolio. But, I think it's important to note right off the bat that, Canadians just investing in the Canadian stock market, we really don't have access to healthcare. Most of the healthcare companies in Canada are marijuana stocks, so they're in a very niche field, let's say, of the healthcare industry. But in the U.S., it's a very deep market. I think about 70% of the global healthcare is in the U.S. market, and like you can see below, there's a wide variety of subsectors, and that helps round out the exposure that an investor in healthcare is getting.
Perfect. Thanks, Chris. And yeah, it seems like the U.S. is just so much more rich and representative of that entire sector. So I think we'll get into that a bit more. And speaking of the U.S., last week the Inflation Reduction Act was all over the news. Can you walk us through some of the tailwinds or headwinds that you see for healthcare industry as a whole, and touch on what the Inflation Reduction Act had in store for the healthcare sector?
For sure. So, it's kind of funny, and it's a bit of a separate topic, but the Inflation Reduction Act, actually has not a heck of a lot to do with inflation, in my opinion. About 3/4 of the act was more kind of on the climate change and clean energy side, and that's kind of obviously a different conversation. There was some minimum corporate tax rate that's in there, kind of again another separate topic. But there was some carve outs for healthcare, and the ones for healthcare were probably the only ones that really addressed inflation a bit. And they were trying to get certain, as we know in the U.S. at times there can be exorbitant costs in that healthcare system. So there were some certain caps on healthcare costs that are going to come online over the next few years. Cap prescription costs for certain drugs for certain people. It's not, I wouldn't say, it's an overhaul of their system, but incrementally it's going to reduce costs for certain people. So, kind of attacking inflation from that healthcare side of things. And you're going to see, a little bit of a commitment more so to what we do in Canada, where obviously the provinces negotiate drug prices, kind of on a unified and even on a national level, we negotiate prices. The U.S. is going to do a little bit more of that through their Medicare. So, is it a tailwind for healthcare? Listen, I think it's an acknowledgement that healthcare costs have become quite high, and we know with the demographic shifts are going to play more and more of a role. This is a bill that's going to reduce costs somewhat, but I think from an investing point of view, and I'll go back to looking at Canada, the healthcare is a very important sector to get exposure to, and you just can't do it in Canada. And so while this bill is kind of taper maybe some of the money that can be made by certain companies, it's by no means, I would say, a headwind for healthcare. And I think the tailwinds are, in terms of that demographic shift and the need for continual innovation are going to, outweigh the, kind of any kind of revenue pressures from this side. So that's kind of what's been going on. It's more, I think overall the Inflation Reduction Act is a little bit more bark than bite, so to speak. And, again, I think the demographic shifts and just, the general trend towards innovation and technology, which I think is important in many sectors, whether you're selling cars, whether you're digging for oil, whether you're providing healthcare, these are going to be real big tailwinds going forward.
For sure, that's great. And I don't know how many vaccines I'm on now. I've lost count, but I've got a few in my arm from COVID, and I'm sure that's just only going to continue. Now, Canadians, as you mentioned, don't get a lot of exposure to healthcare in their traditional economy, right? The S&P TSX Composite just under 1% in healthcare. So how can Canadians get exposure to healthcare through ETFs, and what considerations should they be thinking about when selecting a product?
Well, again, here's where, the ETF market can just be really helpful for getting targeted exposure for your portfolio, whether it's in the equity space, bond space, And here we're looking at the sector space. There's a few different options in Canada. Generally, you'll see a market cap option. iShares tends to have market cap products. You'll see some products that are also index based, like the TD or the Evolve. And in BMO's case, we've launched equal weight sectors. One of the reasons we launched equal weight sectors is that market cap sectors can have really high concentration. So those large companies carry higher weights. Sometimes that can introduce more stock-specific risk when, as an investor, you're really trying to get, sector-specific risk when you're investing in healthcare or a sector exposure. So that's the direction that we've gone. You'll notice with various providers, currency options is something that's very popular with ETFs and give you that ability to either hedge out that currency risk, for example, as we do in the ZUH, or you can do unhedged as well, and you would have exposure to the return of the healthcare companies plus the return of the US dollar. So ZHU is one that we launched a little bit more recently off the back of demand. But yeah, there are a few tools, and they all have that benefit of ETFs in terms of transparency, low cost, intraday liquidity, of course, can give you that ability to get exposure to this sector.
Perfect. And you mentioned equal weight versus market cap weight. Can you walk us through what we're showing on this Bloomberg screen grab here? Yeah,
for sure. So just to that point of looking underneath the hood and looking at the subsector exposure, you can see how different ETFs will have different exposures. What we're looking at is on the portfolio weights, that's the weights of the equal weight approach that we're using in those two BMO ETFs I mentioned, ZUH and ZHU. The benchmark is a market cap index, and you can see different drivers. And one that I, personally am somewhat like the equal weight approach is look at that pharmaceutical weight. So when we're talking about cost pressures, obviously the cost of drugs in the U.S. is a problem that needs to be addressed over time. Cost of drugs generally is an issue that needs to be addressed, but it seems to be particularly acute in the U.S. And in the equal weight approach, again, it's a little bit less weight to those pharmaceuticals. They're very big companies. We know that they have very high weights in the market cap index, but in the equal weight approach, it's a 14% underweight to those pharmaceuticals, and spreads out that exposure a little more evenly across the rest of the subsectors. So overall, a great example of how a different index methodology can lead to different weights under the hood. And in this case, lead to a weighting where it gives you maybe a little less exposure to pharmaceutical and more exposure to some other subsectors.
Awesome. Thanks for those great insights, Chris. I want to turn over to Dan now. Thanks for your patience, Dan. Let's start talking about genomics and genomic innovation. How would a genomic analyst look at things a little bit differently than a traditional healthcare analyst would? What are some of the sort of similarities and differences from that side?
Yeah, happy to jump in here, and thanks again for that, all the information there at the beginning. With the genomic revolution, I think it's important to zoom out here real quick and just understand that this is relatively new. So from ARK's lens here, we believe that you need to have analysts with backgrounds in these new fields. So we've went out and we have found a really strong analyst team that has got their hands dirty in labs, working with these types of technologies, doing DNA sequencing, gene editing. And when you look at more maybe a traditional Wall Street healthcare type of analyst team, the backgrounds will look different. Our analysts have degrees in biomolecular engineering, epidemiology, plant genomics, biotechnology. So they have this kind of different way of looking at the world in this new evolving field of research. And when you think of how we break our analysts up, I like to think of we sort of flipped coverage sideways here. So in more of a traditional shop, you'll see these kind of vertical GIC sectors or industries for healthcare and within healthcare as well. On our team, our belief is that these types of technologies, they're going to cut across sectors and industries. So that's why I kind of said flip it sideways. Think of it more horizontally here. So you'll see coverage areas like DNA sequencing, synthetic biology, gene editing. And to give an example, which I think will be helpful to understand that cutting across sectors, this has ramifications beyond just human healthcare, right? Humans make up a very small amount of this planet's biomass. So we expect there to be disruptions within livestock, aquaculture, and agricultural industries as well.
That's great. Yeah, I was reading yesterday that they're working on making spicy tomatoes and decaffeinated coffee beans. So lots of applications for gene editing for sure. Let's provide our audience with an intro or intro 101 into what genomics is all about. What are some of the key milestones that we've reached recently when it comes to the genome?
Yeah, of course. I think maybe a fun fact here just at the start. So 99.9% of the genome is the same for all humans, everyone on this call. It's that 0.1% that really changes everything. So to kind of walk through this progression and the milestones here of how this industry has evolved, the Human Genome Project began in 1990 with the goal of really enabling personalized, precision medicine. And this was a global effort. It took 13 years and about $3 billion to complete in 2003. Now, the provocative part from then, 2003 to now, has been the cost decline in DNA sequencing. It's been the largest cost decline we have seen in history. So today, that cost is about $500 and roughly, just under an hour of compute time. So this has gone from a total global endeavor that took over a decade, to really just being a daily routine. And I think that kind of begs the next question. Well, why isn't this front and center? 20 years, all hype, no bite. And it's only been really until recently where costs have declined to a low enough point where they are more competitive than some legacy counterparts. And for an example here would be a pharmacogenetic panel testing. So this is just a group of genes that you test to see how different phenotypes will handle certain types of medicine. So in 2014, this cost $20,000. Fast forward 8 years to today, that costs $200. So what was once the price of a car is now the price of AirPods. So that guessing game of medicine, it can now be stripped out. And these cost declines are really thanks to Wright's Law, which ARK has centered its research on here, and how we try to identify these disruptive opportunities from an investment lens, where every cumulative doubling of a unit produced, in this case, every cumulative doubling in genome sequenced, there's a consistent percentage decline in price. And when you hit that cost tipping point, you'll see a decline like 20,000 to 200 from 2014 to 2022. So kind of beyond those cost declines, what really excites us too here in this realm is the convergence of these technologies. So again, you have that cost decline with DNA, RNA, and protein sequencing, opening up your ability to read human biology from beginning to end. You have an accelerating advancements of innovation within gene editing, which is really how we can kind of like target, edit, and disrupt cells. And then you have artificial intelligence, which is enabling researchers to, at a lower cost, predict and more accurately forecast the outcomes of these experiments. So with that convergence, we no longer are treating or controlling for symptoms of a disease, but researchers, they can cure disease permanently now. And this is, not just, again, to come back here, this is not just humans. We think this is could be one of the most powerful tools to meet global food demand while reducing environmentally harmful agricultural inputs.
The growth potential just amazes me. It's so interesting to hear about. Let's get into some of your research at ARK. What are some of the key themes or areas of opportunity that you guys see in this space right now?
Sure. So every year, ARK, we put out what's called our Big Ideas Report, and you can find it on our website, where we kind of review the year's worth of research and put it out there for the public to dive into. And two areas in the most recent report have been sort of the expansion of gene editing technologies, which you'll, on the screen here you can see as one, kind of CRISPR and gene editing, and then two, advancements within multi-omics. And I know we have a few slides following here that would probably help illustrate as we go along.
For sure. And you guys also have a really good podcast too that goes through some of these themes, FYI, right, for your innovation.
Yes, the FYI podcast. And again, that's kind of with the analysts that I talked to at the beginning here, specialized backgrounds in these technologies, and they meet with sort of the forefront entrepreneurs and researchers themselves in these industries. So it's quite interesting.
For sure. Okay, so talk to us a bit more about CRISPR and from an investment lens, the growth potential for this particular area.
Yeah, of course. So on this slide, I think what the major takeaway I want everyone to have here is the pace of innovation is accelerating. Each of these rows you kind of see, these are a different modality of gene editing and how it's evolved over time. Time being that x-axis here, and on the y-axis, it's showing how powerful these types of methods can be. And the way you can read this, when the purple line begins, this is really the first time there was any edit to a cell. So think, like a yeast cell, mouse, fruit fly, something like that. Once you hit the black row here, that's the first time there was an edit outside of a human, but using a human cell. And then to the end of the black line here, this is the first time someone was treated with a therapy of one of these types of gene editing types. So again here, sort of that discovery and application is accelerating, and that is something that we put into our models. Right, I think a lot of more of these traditional analysts that we've met with and spoke with, they don't put that type of emphasis in their modeling, and largely we think this type of innovation and this acceleration is due to those cost declines and the convergence of artificial intelligence, which is accelerating discovery and reducing failure rates. So maybe on the next slide here, this shows the kind of the Cas delivery system, if you will, illustrated in a way to show, this is a big toolkit. It's not just used for one thing. So researchers, scientists, they have different ways to go about attacking and targeting an experiment that they're focused on. And then in the next slide, this is probably what a lot of this audience is interested, sort of the investment opportunity here. By ARK's calculations, we believe the gene editing and therapy companies in the public domain will have a market cap equal to about 1.1 trillion by 2026. And what's exciting, and kind of you see this in the chart here, how this is graphing alongside, it's the percentage of R&D spend. And we think that can grow, so I should say the percentage of R&D spend for a pharmaceutical and biotechnology company enterprise value. We think that percentage is going to scale from 3 to 17%, and that's magnitudes different. So in our research, we're seeing R&D, trial expenses, brain power, kind of everyone's putting it towards these gene editing opportunities because of the growth it has, not just in humans, but across those other industries mentioned. And I think what goes missed a little bit here in the traditional sense, and I get this from a lot of client questions I receive about the profitability of these firms. And we understand, we expect many of these to not be profitable at this time, but we also believe that this genomics revolution is perhaps one of the most misunderstood opportunities in the market. And if you look at a company like, Intellia, gene editing firm, they have these milestone revenue contracts that will inject the company with sufficient cash as long as this company continues to successfully mature its pipelines. So in our eyes, as long as this science can continue and the advancements are made, these companies have sufficient funding.
Perfect. Thanks, Dan. Definitely an amazing long-term growth prospect for that area. talk to us a bit more about the second theme around multi-omics. Can you break this down for us, those of us who don't have a science degree, what this is all about and what the growth potential is for this area?
Yeah, when I was first learning about this with our analysts, I think I had to go back and put on my high school biology cap to understand what this was, even at a high level. So multi-omics here, it's a combination of the word omics, right? And many of these you've probably heard of. It's best illustrated here on the slide that you're seeing. This is the central dogma of biology. It's really just the flow of information, sort of how our bodies store, retain information for generations, and to understand and how a mistake in DNA can echo out here. It's important to sort of understand each of these steps. So if you think of DNA, this is the data storage center. And we finally have the tools to read this DNA, the storage center, at a realistic cost and repeatable, right? Then you move over here, there's a transcription to RNA. RNA, think of as like the messenger who deciphers that data and then delivers the information to create proteins. We now have technology to override what that message is. And then finally here you have protein. This is what is currently happening in the body. And this is much, much more dynamic than DNA because DNA is just a static readout. So you can kind of think of this as these are the molecules that, a source of information that we can use to learn about ourselves. So again, back to that omics part, multi-omics, you have genomics, which we keep saying, and our analysts will tell us that is kind of funny because even a few years ago, you can see how fast this has advanced because even a few years ago, this was called genetics because we could really only look at one or two types of genes repeatedly. Now it's genomics. But DNA here, that's not everything. The RNA portion here, that middle transcription, this is transcriptomics, and then the end here, proteomics. So if you jump to the next slide, from an investment point of view, I think what's important again here is to just reiterate that this is not just humans. This is everything that shares that organic process that was on the previous page, the central dogma to biology. So from our point of view, we believe these companies are currently roughly valued at around 110 billion, and we think that this will scale to 300 billion over the next 5 years. And you can see that detailed in the red text at the top. In the circle chart here in the middle of the page, I'll kind of walk through each of what these are. I think that's important to understand why this can be such a large investment opportunity. And starting with the small one, population health, different companies have a different allocation percentage of their GDP to these types of programs. So just as that increases over time, as the investment opportunity will, and you can see that's why it's the smaller one here. The large portion is oncology. That's probably not surprising to many. You need diagnostics to test, prescribe therapies, and even prevent some cancers. And that's why, and I think here what's interesting is you could, if there's some follow-up reading you want to do, it's on ARK's website, that big ideas report I had mentioned. We dive into a lot more of these opportunities more granularly, and you'll be able to see a little bit more, maybe even looking at liquid biopsy and how it has the ability to reshape the cancer mortality curve by catching cancers earlier. And then finally here, the green section, organ health. In our eyes, this is probably the underappreciated opportunity. So with cancer cells in the oncology part, cancer cells throw off fragments of themselves into the bloodstream. That's how that's where the screening, discovery, monitoring cancer comes into play. But organs don't do that. They don't throw off DNA fragments. So for organ health monitoring, researchers would need to use proteomics. And I'll give you an example here. So cardiovascular disease, it's on par with cancer. But our screening, our risk profile, it's really crude math, right? Age, weight, are you a smoker or not? These do translate into higher risk, but it's back of the envelope type of math calculations. Proteomics solves this and puts real math, real science behind that crude calculation. So you could tell who may be at risk for a cardiovascular event in the next 6 to 12 months type of thing.
That's amazing. It's going to be great to see how this transforms the healthcare sector. Can you give us a couple company examples specific to those two themes of CRISPR and multi-omics? Bring this sort of back to real life and investing and showcase some specific opportunities here.
Sure. So I will start on the top left here with CRISPR Therapeutics. So CRISPR and Vertex have delivered their CRISPR-based gene editing therapy. It's called CTX001 to 75 different patients. Bit of a mouthful there with those letters and numbers, but really what this is it's a therapy in an edit where patients' own cells will now produce higher quantities of fetal hemoglobin, and this is to relieve symptoms of sickle cell and beta thalassemia. So currently there are 75 patients, 44 are beta thalassemia. Of those 44, 42 no longer require any transfusion to treat their condition. Of those remaining 2 there, they have required additional transfusion, but the transfusion volume is 75% lower than previous. Now back to that 75, the other portion of that, there's 31 patients that have been treated for sickle cell disease. In the 14 months since administration, not a single patient has had a blood-related hospitalization. So you can see there's some pretty powerful results going on here. On the top right, you have Intellia. So Intellia and Regeneron, they made history last year presenting the world's first ever CRISPR-Cas9 in vivo gene editing for patients with HATTR. So in vivo, this means it's a gene editing therapy directly delivered to the patient there on the spot. In HATTR, this is a disease which amyloid proteins will build up, and if untreated, can cause failure of multiple organs. So previously, these patients needed monthly, chronic therapy where knockdown of these proteins was 80%. Now, 8 months after this study, the mean protein reduction for a one-time treatment within that highest cohort is 93%. So you're seeing a one-time treatment with a higher knockdown of protein rate. Again, this is curing diseases, right? You don't have to control and treat these any longer with these types of advancements. So those top 2, those were the gene editing side. The bottom 2 here, more the multi-omics side. Exact owns 2 of the world's largest diagnostic franchises, Cologuard and Oncotype. And when you combine these, Exact now has a through Cologuard, they offer screening for cancer and detection. You can think of this at early stages, relapses, or just routine checkups, trying to identify cancer. Unfortunately, if cancer is identified, you then kind of go through their pipeline now into Oncotype. And this tests how aggressive that cancer is by testing the tissue. And this helps to calibrate over and under treatment of the patient. So really combined here, this can tear out wasteful spending in the healthcare system. Bottom right here, Twist. This is a synthetic biology company. Now what synthetic biology is this is a method to manufacture biological constructs, something like DNA or RNA, quickly, uniformly, and at a low cost. So as sequencing costs have declined and these therapy experiments are expanding, scientists are demanding access to these types of biological constructs. And Twist, in our view, is the preeminent provider of oligonucleotides. And it's a mouthful, but really what this is it's a short piece of DNA or RNA that's used as either a probe or a primer, and it's really critical for molecular biology. So to put this in an example we can kind of grab onto with COVID, many of us probably had some type of PCR test. And what this is PCR, PCR can't exist without the primers of this. And what that primer does is it attaches to some type of mutation, a virus, and really just indicates its existence. And it applies to more than just COVID PCR testing, right? It's across molecular biology to identify if something is, in existence. So you can see sort of its broad application here and why there would be so much demand for this as these gene editing technologies advance.
That's great. Thanks, Dan. I love the real life examples that you can really grab onto. So if for our audience you do want more information, highly encourage you to check out that Big Ideas report on the ARK website, and also check out the podcast, FYI, for your innovation. So in Canada, let's talk about how you can get access to this theme. When it comes to your options, we've included all the Canadian listed options here on the slide. So you have Edge from Evolve, which tracks a selective index. You have Emerge, EAGB, that's available in CAD and USD, and these are managed by ARK. And then lastly, but not least, you have ZGen, our BMO Genomics ETF. And this tracks an index that MSCI has developed in partnership with ARK. So it uses all of ARK's research, but it does provide a more passive or diversified approach across a larger number of names. So check out those ETFs if you want to learn more about them on their respective websites. Just sort of to wrap up, you know, Chris mentioned that both healthcare and, you know, now we've seen genomics ETFs, these provide great sector diversification for Canadian investors with that inherent hometown bias, right? You know, I mentioned 1% of the S&P TSX composite is in healthcare, and Chris mentioned that's concentrated in the marijuana industry. So these are areas that you can add onto your portfolio to really add diversification and sort of complete that portfolio from a sector specific standpoint. So today we walked through, and just the chart here that we're showing on this slide shows the correlation of Canadian broad market to US sectors. And I thought this was interesting because it shows that you can see US healthcare is one of the lowest correlation to the Canadian market. They're at 0.65. So that was interesting to note as well. So we walked through healthcare, ETFs, traditional healthcare as sort of more the blue chip focused, larger cap names, diversified across subsectors. And then we talked about genomics, which is, you know, diversified as well, but among genomic technologies specifically. And this definitely has a smaller cap tilt, has a higher growth profile. So just be aware that this can mean more volatility when you're thinking about how much to allocate to something like this and how to use it in your portfolio. With that, I want to turn to our audience questions today. We love to receive them, so keep them coming. If I don't get to them on our weekly episode, we will email you directly a response. But Dan, this one came in and couldn't have been a better time. So I'll throw this one your way. What is the outlook on technology stocks after the large decline, specifically ZINN and the Cathie Wood ARK funds?
Sure. So over the last, call it 18 months, the market has been gripped by macro fears, specifically inflation and interest rates. And in our view, this has driven, many investors away from high growth stocks, and especially those that fall outside of traditional benchmarks, which you'll find are a lot of these genomic type names and disruptive type of names outside of genomics as well. Now in time, if you look at sort of these healthcare names, right, science isn't going to stop. The long-term disruptive and secular trends remain intact, and they are improving, right? We covered a few just a few minutes ago. So to us, this decline has really created a tremendous buying opportunity in our eyes. And in our opinion, the macro picture that remains the focus, inflation and interest rates, we think that it's going to turn the other direction in the next 6 to 12 months. And once that plays out, the market will begin to start focusing on the fundamentals again. And we believe investors will then see that, the power of these disruptive technologies that has been kind of going unnoticed a little bit for the last 18 or so months.
For sure. It seems like this could be potentially a good entry point for sure. Next question. I currently hold URA in my portfolio, but I'm interested in a broader clean energy play in one ETF. What are the clean energy ETFs offered through BMO? So URA is a uranium ETF, but if you're looking for a more a broad-based clean energy play, you can look at Zed Clean, our global clean energy ETF, and that's an index-based ETF. It tracks the S&P Global Clean Energy Index, provides you exposure to around 100 names in the production, equipment, technology space of clean energy, so very well diversified. Another option, and this is one that we talked about last week on Market Insights, is renewable infrastructure. So GRNI is the ticker, and that is the BMO Brookfield Global Renewable Infrastructure ETF. A bit of a mouthful, but again, if you're interested in learning more about that one, I would check out last week's episode. Okay, Chris, this last one is for you. Is there an ETF I can purchase that includes residential real estate as part of a larger real estate picture? I'd like to take advantage of the market downturn and price declines.
Yes, absolutely. ZRE would be our REITs ETF. So those are Canadian REITs, just over 20 holdings in the portfolio. Again, this is an equal weight approach to sectors. So it's just, high 4% weight per holding in the portfolio. And, again, that helps kind of deal with that concentration issue, because a couple of the big REITs would take up a lot in the market cap space. But if you look at ZRE, it's about a quarter residential, so 25% linked to some apartments and residential properties that are part of this picture. But it's well diversified. To continue on that theme of subsector exposure, it's got some healthcare, 10%. It's got some industrials, retail, office, and diversified REITs as well. So it's a well-rounded real estate ETF. And I think the question is a good one, because we have seen certainly weakness in this ETF post-COVID. And, if you look at the pre-COVID highs, this ETF was trading in the $27 range. It went as low as 22 recently. And, even now it's recovering a bit, but it's 24. And certainly investors have been concerned about real estate in Canada, perhaps concerned about the larger economic picture as well. But, as of now, this one would be trading more in the low end of its kind of historical range, offers a 4.5% dividend yield. And again, is another example of a sector ETF that can really help you fine tune and get you that precise exposure that you're looking for in a portfolio. So ZRE again is the ticker there.
Perfect. Thank you, Chris. So that caps off another great week of ETF Market Insights. Thanks to everyone who tuned in this week. And thank you to Chris and Dan for being my experts today. It was a very interesting show. Next Friday, I'll be off, but my colleague Alain will be your host, and he's going to be walking you through your ETF toolkit, showcasing some great ETF tools that you can use to explore what's available in the market. He'll be joined by Quote Media and BMO Investor Line as well. So I hope you'll join us then. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.